Hey guys, welcome to Say More Money, where we simplify personal finance and help you become financially independent. I'm Nishant, and in this video, I'll explain you how you can file your ITR on the debt-based mutual funds. So what I've done is I have downloaded a mutual fund statement from the AMC. So I had purchased two debt funds, Nippon India Ultra Short Duration Fund and Nippon India Ultra Short Duration Fund, Segregated Portfolio and Direct Growth Plan. These were the two mutual funds which I had purchased somewhere in 2017 and I redeemed them in 2021. So I went to Nippon India website and from there I downloaded the capital gain statement. And now I'll tell you how you have to file the taxes on this. So if you go to the income tax website and you log in, you reach this schedule summary page for ITR2. Click on schedule capital gains and here you have to select the sale of assets other than all the above listed items. So this is where you will fill in the debt based mutual fund taxes related information. Click on continue. Click on sale of asset other than above listed items. Click on add details. So here you will see two options. One is short-term capital gain and long-term capital gain. Since my mutual funds were purchased on 2017, it will be a long-term capital gain for me. I'll select this and the pop-up will appear. The same process is applicable even for short. Now in long term there are two parts. One is A1, which says that in case assets sold include shares of company other than the quoted shares, and the second is A2, full value of consideration in respect of assets other than unquoted shares. So I'll fill in the values here because mutual fund Nippon I feel is publicly available, so this will be other than unquoted share. So full value of consideration is the total redemption cost or sale cost. So if I go back to my mutual fund, this is my redemption detail, this one and this one, and the cost which I have received from the redemption is, if I add up here, 10, 20, 30, 40, 50, 60, 60,000 in this, and then 60,320 plus 54, 60,374. That will be my total consideration cost. So I'll fill in 60,374 here. Next value is cost of acquisition with indexation. So cost of acquisition is the purchase cost and that we have to calculate with indexation. So if you go to this particular thing, gain losses, it will tell you the indexation cost, and indexation cost for the first one is 0, but the second one indexation cost is listed here. So let's open a calculator and add up the values. So when you add up all the values here, you will get the final acquisition cost. So your total acquisition cost comes to 52,993.09. So let's fill in that value here. 52,993 point. It does not take decimal, so just rounding off here. Cost of improvement without indexation is 0. Expenditure in connection to transfer is 0. So basis that your balance or the profit or the long-term capital gain comes to 7381. You can just verify it here from the sheet. So in the mutual fund statement, you see that the capital gain losses with long-term index. So this particular value and this particular value, when you add up, you're getting 7381.16, which is the same as what you're getting on long-term capital gain on asset in the ITR field. So this way you have to fill in your ITR for the debt-based mutual funds. I hope you found the video useful. Please remember to like, subscribe and share the channel. Until next time, this is Nishant signing off. Bye, take care, tada.